welcome to my channel Knowledge Hub. This is your virtual commerce classroom and I am Anamika Basu. Today I am going to give you a new perspective to the things which you already know. So without further ado, let us begin. So today our topic of discussion is accounting equation. And along with it, I am going to give you a brief on some of the basic accounting terms, accounting concepts and modern approach to accounting. Okay, so now let us try to understand this accounting equation with the help of an example. Suppose you need to get a book from the market, for which you borrowed rupees 600 from your parents. Now, you went to the market and you found out that the book costs an amount of rupees 1000, but you have only borrowed rupees 600 from your parents. On checking upon your purse, you found out that you have another rupees 200 with you. So that becomes a total of rupees 800 now. Still you are running short of an amount of rupees 200. To get the book, you met a friend and borrowed another rupees 200 from him. So that gives you a total of rupees 1000 for which you can get the book from the market. Okay, so now book is something which you will be able to derive some benefits from. So this book becomes your asset. Your parents and you are no different. So the money invested by the both of you is the capital. Capital is something that is invested into the business or the firm by a proprietor. Another rupees 200 that you borrowed from your friend is something which you need to repay him back after a certain period of time. So that is the amount which you borrowed from the outsiders. Any amount of money which the firm borrows from the outsiders and needs to repay them back is called the liability. So this becomes your liability. So now your basic accounting equation stands at capital plus liability equals to your asset. So this is your basic accounting equation. Remember one thing, your asset will always be equal to the capital plus liability, because the assets that you have bought for the business will be purchased from the money that is either invested by you or borrowed from the outsiders.
So now let's move on to the practical problems of the chapter accounting equation. Before we do that, it's necessary for us to understand the format for solving the problems. So this is your format for solving problems for the accounting equation. On the left hand side, we write the transactions. We will be getting the transactions in the question itself. Then the next head is assets equal to capital plus liability, which is our accounting equation. Below assets, we are going to mention the subheads as per the transactions that will be given into the question. Next is the capital and liability. Liability will also have certain subheads depending upon the transactions in the given question. Here, A represents the first transaction. There will be some amounts for assets. We will be adding them and we will be writing them under the assets, and according to the problem we will either add or we will subtract it. Similarly, below the capital we'll put their amounts, and the liabilities also we will be putting under these heads accordingly. All this we will be understanding with the transactions that will be given in our problem. After writing two such transactions, we will do a total by drawing a line, and this gives a new equation by adding or subtracting these amounts. The equation that we will get is the new equation. Again, we will write another transaction that will be given in our question below it. And after this, again we will draw up and find out our new equation. This process will go on until and unless all the transactions in the problem have been done, and at the end of it, we will be able to derive our final equation. Now, at every stage, our accounting equation will be verified. Assets, the balance of the assets will always be equal to the balances of the capital plus its liability. So, without further ado, let's begin with our problems. So now, this is our first question from the chapter, the accounting equation. My question reads as, prepare the accounting equations on the basis of the following transactions. So first, in the solution, we will be drawing up the format. On the left hand side, I'll write transactions, and on the right hand side, I have written assets is equal to capital plus liabilities. For my convenience, I have written assets on the left side of the equal to and capital plus liabilities on the other side of the equal to. If you want, you can do it in a different way. You can write the capital plus liabilities on the left and the assets to the right. For my convenience, I have written it in this way. So now let's begin. The first transaction reads as, started business with a cash of rupees 1,40,000 and stock 2,50,000. So below transactions, we are going to just write what are we doing. I have copied the transaction here. Started business with cash rupees 1,40,000 and stock 2,50,000. Now, stock and cash, these are both the assets of the business. Why do I call them the assets? We know an asset is a property of the business. And these cash and stock are the properties of the business, and we will be able to derive further benefits from it. So these two for now are my assets. So below my asset, I have written the subheads cash and stock, below which I am going to put the amounts respectively. Below cash, I have written 1,40,000 and stock stands at a amount of 2,50,000. Now, since these are introduced into the business by the proprietor itself, so this becomes the capital as well. So the total amount of 1,40,000 plus 2,50,000, that is an amount of 3,90,000, I'll be writing it below my capital. And this also verifies my accounting equation. See, the assets, the total of my assets is equal to my capital plus liabilities. My left hand side is equal to my right hand side. At any given point of time for every transaction, this will satisfy my accounting equation. Let's move on to the next transaction. Sold goods costing rupees 50,000 at a profit of 25% on cost. So below transactions I have written it. Now, from the transaction itself, it's evident that I have sold a stock. Goods refers to the stock itself. Goods and stock are both the kind of same things. These are purchased for the purpose of resale. But stock is lying unsold at the end of the year. So below stock I have reduced 50,000 because I'm selling it. So my stock gets reduced by an amount of 50,000. Now from the sales I'll be receiving cash, and the cash amount will be 50,000 plus 25% on 50,000, that becomes 62,500, which is I have written below my cash. This is the amount I'll be receiving from the transaction. And now there's a profit as well. I'm earning a profit of 25% on my cost. Always remember, any profit or loss and expenses are added or subtracted from the capital. Since I have made a profit of 25% on my sales, this profit will be added to my capital. So 25% on 50,000, that's an amount of 12,500, I have written below my capital. Now, this also again verifies my accounting equation. The left hand side, that's my asset balance, is equal to the balance on my right hand side, that is a capital plus liability. Now I have drawn a line and just done the total to find out my new equation. So my new equation stands at 2,02,500 plus 2 lakh stock, bank is 0, capital becomes 4,02,500. Since there are no balances for this bank and creditors in the previous two transactions, I have written 0 for my convenience. So I have found out my new equation. Now we will move on to the next transaction. Number C reads as deposited into bank account rupees 1,80,000. So, from the given transaction, it's evident that I have taken out my cash balance and deposited into my bank account. So, my cash will be reduced by 1,80,000 and my bank balance increases to 1,80,000. But this does not affect my capital and neither the liabilities. And if you again check the validity of the accounting equation, this is already verified. The left hand side is equal to the right hand side. So now, after adding it, we get another new equation which stands at a total of cash 22,500, stock at 2 lakhs, bank at 1,80,000 and the capital balance becomes 4,02,500. Now let's move on to the next transaction. This reads as purchase goods from Mohan for rupees 80,000. So now from the transaction, I have written it below the transaction. Now from this, it is very much understood that this transaction will increase my stock or my goods. So I have added an amount of 80,000 to my stock. Now, as it is said that purchased goods from Mohan, it's not said that I have paid him or nowhere it's mentioned in cash, but a main name is mentioned. That means I have purchased the goods on credit. I have not made any payment to Mohan as such. So my cash balance remains unaffected here and I have added 80,000 to creditors. Mohan being a creditor, I have added this amount to my creditors. You can here see creditors are the persons from whom goods and services are purchased but no payment has been made yet. So Mohan being a creditor, I have added the balance 80,000 to the creditors. Now this also verifies my accounting equation. My left hand side is equal to the right hand side. Now since all my transactions are completed, I'll draw up my final equation. And now my final equation stands at cash balance is 22,500, stock at 2,80,000 and a bank balance is of 1,80,000. My capital balance stands at 4,02,500 and my creditor stands at a balance of 80,000. Now, to verify whether you have done the problem sum or you have solved the problem correctly or not, you can at any point of time verify your equation. If your left hand side balance, that is the total of the assets, is equal to the capital plus the creditor's balance, you will get to know that your sum has been done correctly. And now for your reference, there are some notes I have added it for your reference. Kindly go through them for a proper understanding. Let's begin with another problem of the accounting equation. My question reads as show the accounting equation on the basis of the following and also prepare the balance sheet. Previously, we have only prepared the accounting equation. Now, there's an additional part to my question, that's the balance sheet. So, the format has been drawn. Transactions equals to assets. Transactions on the left hand side, assets is equal to capital plus liabilities, which is my accounting equation. Now, my first transaction reads as started business with cash rupees 60,000 and goods for rupees 30,000. Below assets, I have written under cash 60 and my stock increases to 30,000. And both these amounts are my investment into the business or the proprietor's investment, so that becomes for the capital as well. So 90,000 has been added to the capital. The next transaction reads purchased goods for 40,000 and on credit 25,000. So now there's an increase in the goods. From the transaction it's evident. Now the goods that have been bought is for a total amount of 40 for plus 25,000, that is 65,000. So my stock will be increased by 65,000, which I have added to my stock. Now I have purchased this amount, amongst which 40,000 is for cash. So my cash is reduced by 40,000 and the remaining balance which I have is I have not paid yet, but I need to pay at a future date. So my creditors will increase for an amount of 25,000. On adding my transactions, my new equation stands at cash for 20,000, stock at 95, and capital balance is 90, and my creditors become 25,000. There's no amount for the debtors till now. The next transaction now reads as goods costing 48,000 sold at a profit of 33 and 1/3%. So from this transaction, it's evident that I have sold my goods. So my stock will be reduced by an amount of 48,000. And from selling this, I have earned a profit of 33 and a 1/3%. So I've calculated for 1/3% on 48,000, which becomes an amount of 16,000. Being a profit, it will be added to my capital. So I have added it. So below capital, I have written 16,000. Now the total cash which I have received is mentioned in the later part of the transaction. Now 48,000 plus 16,000 is the total amount which I have received, out of which 3/4 payment is received in cash. So only the 3/4 amount of this total, that is an amount of rupees 48,000, I have written it under cash. The remaining portion which I have not received yet, but I am going to receive it in the future, that increases my debtor. So below assets, there's another head of debtors, below which I have written an amount of 16,000. Now, at any point of time, if you want to verify the accounting equation, you can do that. The total on my left hand side, that is the total of the assets, will be equal to the total on my right hand side, that is the capital plus liabilities. Now again, I'll do a total. The total stands at cash at 68, stock 47, debtors 16, and capital of 1,06,000, and creditors stand at 25,000. After drawing up the new equation, I'll move on to my next transaction. My transaction reads as goods costing 20,000 sold at a loss of 5%. So now again I'm selling my goods, so my stock is going to reduce by 20,000. And I have sold these goods at a 5% loss. So 5% on 20,000 is an amount of rupees 1,000. Being a loss, I have deducted it from my capital. And the later part of the transaction mentions this out of this total amount, only 12,000 is received in cash. So I have written 12,000 in my cash. I have received the money, so my cash will increase by 12,000. And the later part, which I have not received yet, but I'm going to receive it in the future, that increases our debtor as well by an amount of 7,000. The next is paid rent for 4,000 and salary of 6,000. So both these payments are made. Now for this, my cash will be reduced by an amount of 10,000. That is 4,000 plus 6,000, an amount of 10,000 is reduced from my cash. And all these expenses affects my capital balance. So from my capital, I have also reduced 10,000 and drawn up my new equation, which stands at cash at 70, stock at 27, debtors for 23,000, capital at 95, and creditors for 25,000. Let's move on to the next transaction. Received cash from debtors of rupees 15,000. So being cash received, my cash will increase by 15,000 and my debtors will also reduce because the debtors have made me the payment, so my debtors will be reduced by 15,000. So I've written increase my cash to 15 and reduce my debtors to 15,000. The other things remains unaffected, so I have just written 0 and drawn up my new equation, which stands at cash for 85, stock at 27,000, debtors for 8,000, capital at 95,000, and creditors for 25,000. The next transaction reads as paid telephonic bill amounting to rupees 800. So payment of rupees 800 will reduce my cash. So I've reduced my cash by 800, and being an expense, it also affects my capital. So my capital also is reduced by rupees 800. Now we do a total to derive our final equation, which stands at cash for 84,200, stock at 27,000, debtors for 8,000, capital stands at 94,200 and creditors show a balance of 25,000. Now, if you want to check whether your sum is correct or not, if you do the total of the left hand side and if it's equal to the total on the right hand side, that is the capital plus creditors, be rest assured that your sum is correct. Now, the next part of the question was to prepare a balance sheet. So now, let's move on to the balance sheet of the problem. So now, as you can see, my final equation, this was my cash balance, this was stock, this is my debtor, this is my capital, and this is my creditor. Now, coming to the balance sheet, this is a simple format of the balance sheet. I've written balance sheet as at, I've not mentioned any date, but a date is mentioned here. On the left hand side, we draw up the liabilities column with its amount, and on the right hand side shows the assets balance with its amount. Now from the final equation itself, we are going to put these values. In our equation, cash was standing at a balance of 84,200. So below assets, I have made a head cash and written the total amount of it. Next, the stock was at 27. I made a head of stock for rupees 27,000 in my balance sheet. Next, the debtors was stood at an amount of 8,000. I've written debtors and put an amount of 8,000. And made the total of it, which stands at an amount of 1,19,200. Now coming to the liabilities portion, I have my creditors which was standing at an amount of 25,000. I have written the head creditors for 25,000 and the capital balance which came down as 94,200 in my accounting equation. I have written that as well. So this also adds up to a total of 1,19,200. So my liabilities is equal to my assets. And a balance sheet is always tallies on both the sides. Assets will always be equal to its liabilities. So the balance sheet also shows you the correctness of the sum.
In this video, I have already shown you two grounding sums from this chapter. The rest of the chapter